And at this point, there are no good options. They keep the free money, well, punch bowl rolling, then that will just exacerbate the inflation that we're dealing with. They take the punch bowl away, that creates a deflationary environment because stock markets are being volatile and going down, and real estate markets, well, those are still going up. But you got to have a place to live. You don't have to own a stock, but you got to have a place to live. You got to have that shelter. Food, water, energy, security, barterability, wealth preservation, community, and shelter. Get it done. Get it done. You're not going to know the day before. And even if you did know the day before, you would not have time to get everything in place. I can't even begin to tell you how thankful and grateful I am that the universe put me in this space to understand what was happening. I started prepping. Well, I started with the gold and the silver because if you don't preserve your wealth first, it's kind of hard to do anything else. But I bought this property and started an urban farm. I'm not a gardener. I'm not a farmer. I am an urban farmer now. But I certainly wasn't when I started this because I 100% knew food becomes the single biggest issue for people. We don't know how long this is going to last. But what we do know is it's here. It's here. So short-term dollar funding, tensions, and market liquidity. Market liquidity is your ability to buy and sell easily without dislocating prices. That's market liquidity. So the more money flowing into an area, the more liquid that asset or that instrument is. So with all that free money, made the markets really, really liquid. But now that is starting to change. International dollar funding conditions have also shown some strains. Because how many times have we talked about the corporations that have issued debt in terms of dollars? They don't own dollars, but when they have to make an interest payment or a bond payment, they have to pay in dollars. So this is really just in theory. You're going to see this whole thing fall apart. I promise you will. But when the Fed raises interest rates, or even when interest rates on government debt goes higher, well, then that's supposed to have an impact on gold because after all, gold doesn't pay you an interest payment. Well, I'll tell you what, 1 trillion times zero is zero. And I've shown you ad nauseum probably how low the purchasing power has gone. There's no purchasing power left. The only thing keeping the dollar viable is your confidence.
There are two crucial factors why silver prices will increase more in value than gold during the next financial meltdown. These factors are not well known by many precious metals analysts because they focus on antiquated information and knowledge. While several individuals in the precious metals community forecast a much higher gold-silver ratio during the next financial crash, Lynette sees quite the opposite taking place. Lynette Zang has suggested in recent videos that the gold-to-silver ratio will increase significantly during the upcoming currency reset. She believes this based on the idea that gold is more the primary monetary metal and has published data showing the surging gold-silver ratio that took place during the end of the Weimar Germany hyperinflation.
Okay, wow, look at this. Global growth projections go down. Now, I want to point something out because the world in 2022 is expected to shrink globally to 3.6% in growth, but then it's going to stay level. Why do you think that would stay level when you have the US, the Euro area, and the Middle East and Central Asia all declining really markedly even into 2023? Not a big shocker. Oh, well, maybe it's because they anticipate that in Latin America, in sub-Saharan Africa, and in Latin America, the Caribbean, that it'll either stay the same in 2023 or get a little bit better. Is that so they could show the world stabilizing in growth in the next year in 2023? I don't think this is really going to look I don't think this is going to turn out the way this map shows. I think it's going to be much, much worse.
While Lynette Zang educates her followers on why it is important to own gold and silver, she does understand the dire energy predicament we are facing. Even the die-hard precious metals bull, Peter Schiff, does not understand the negative consequences of the falling ROI, energy return on investment, and the thermodynamics of oil depletion. Schiff believes that if the debt was wiped clean and the banks were liquidated, then we could start a new economic boom based on sound money. However, the collapse of debt and the banking system would destroy our modern economy for good. There is no way we could survive a cleansing of the debt-based monetary system. Without the debt, most assets have no value.
But let me show you what keeps the central bankers up at night, because they're totally up. In many countries, there is a rising risk that inflation expectations become de-anchored, prompting a more aggressive tightening response from central banks. So what they're really saying here is that the expectations indicates a loss of control because it's a loss of confidence. If they don't think that the Federal Reserve or any central bank, if the public does not think that they can control this inflation, then that is a massive loss of confidence. This is a con game. It requires confidence. So this totally keeps the Fed and other central banks up at night. Additionally, it increases in food and fuel prices could significantly increase the risk of social unrest. And so what they're really saying in here is when people are hungry and hopeless, they make choices they would not otherwise make. They lose the confidence. And then this increases the potential for ultimate loss of control, which is a complete regime change. Now, mind you, the powers that be have a regime change in mind for us, socially, economically, and financially. But they want to stay in control of the shift, and so they want to stay in power on the other side of the shift. This could very well be the opportunity to make some positive changes for the people. Because I don't really want the people that got us into this mess to begin with to remain in control and in power. You think it's going to be different on the other side? Yeah, I don't think so. But we are on the precipice, if it's already started actually, of a global food insecurity issue. And I've been telling you for so many years that food is the single biggest issue for people as we go through these transitions. Food, water, energy, security, barterability, wealth preservation, community, and shelter. Get it done. If you haven't moved forward on these issues in a very powerful way, then I'm sorry, but you are behind the 8 ball. We had a regime shift change from a quasi-gold standard anyway to a pure debt-based standard where we handed over complete control to these central bankers. So between the government and the central bank, there's no purchasing power left. And we're going into a hyperinflationary spiral because they have to burn off all the debt that they've created. And here you go. I mean, I've been saying for a while that I think that this is the start of it. Time will tell, but I'm pretty sure I'm right. I mean, I hope I'm wrong, but I don't think so. I don't think so.
As we've mentioned at the start of this video, gold and silver prices are lower again in early U.S. trading, pressured by rising bond yields, a higher U.S. dollar index, and lower crude oil price. Risk appetite remains tepid at best late this week. Traders got another dose of hawkish U.S. monetary policy rhetoric from Fed Chairman Jerome Powell, suggesting the Fed is on an aggressive tightening path in order to put the brakes on problematic price inflation. U.S. Treasury yields surged and stocks slid after Powell in a speech at an IMF/World Bank meeting reiterated a bias for strong U.S. interest rate hikes in the coming months. Traders and investors are now expecting 50 basis point increases at the FOMC meetings in May, June, and maybe July. Powell detailed his most aggressive approach to taming inflation to date. Meantime, markets are factoring in 25 basis point rises in European central bank interest rates in both July and September.
Because the reality is the liquidity is drying up. And here's how it impacts you. This is the sovereign bank. You kind of remember we were talking about this back in 2013-14 with the sovereign debt crisis with Greece and Europe. I mean, it was all over the place. And it created a doom loop between governments, which are sovereigns, and banks. So here the IMF gave us this beautiful little flow chart on how that is. But without going into that in too much detail, this is really what you need to see. And the note is a sudden tightening, so central banks raising rates substantially. A sudden tightening of global financial conditions is one type of shock that may trigger an adverse sovereign bank feedback loop. This is called a doom loop, but they didn't want to say that in here, but that's what it's called. Because with the government debt, you have to have confidence in your government, or you topple the government. You topple that power. They don't want that. They don't want that. They want to remain in power. But when government bonds aren't, easily purchased around the world, well, and governments need money to continue to run the government and the army, they raise taxes and they reduce services. We actually saw that quite a bit in Chicago several years ago when they were having their own government debt crisis. So higher taxes, fewer services, and job losses, because this transmits to the corporations. All right, we've got a very tight labor market. Of course, they want a two-tier labor market, kind of like China. I did a report on this, I don't know, several months ago with the lay-down economy, and we're seeing it here too in this very tight labor market, where people are reassessing what the value of their time and work is. So right now, we have a tight labor market, but we go into a massive recession, you're going to see job losses. And then that translates into the banks. Bail in anyone? You better not have too much cash sitting in the bank.